for the downturn, and we'll have a look at them. International crisis in markets, slowing GDP, interest rate pressure, weakening rand, falling income levels. They're not going away.
No,
these things are with us,
not for a
and they're
meantime.
with us for a while. So, are we to expect another trading update in 6 months' time? Are banks going to take a lot more strain that we don't know about?
This is what the market's telling us.
The
I
markets,
think this is where
today
the
the market's
surprise
telling
is.
us,
This
yeah.
is where the surprise is, that it is worse. It is much worse than we are anticipating, and we're getting the same problem in the global economy. You know, it's stubborn. It's not responding to all the stimulus that governments are giving. That the
Are we talking
central
it up?
banks
I
are
mean,
giving.
is it people talking
we
it
may
up?
be up. We may be a little too optimistic in that. But,
So
but Chris, in all fairness, nobody knows. You know what I mean? I don't think any of us really know. And I think to try and forecast 1, 2, 3 months out is absolutely guesswork.
Yeah.
So I think we've got to play this almost on a day-to-day basis.
Now, let's maiden results out of Adcock Ingram. Now, there were a lot of issues with Adcock Ingram before they unbundled out of Tiger Brands. What did you make of the maiden set of results that came out today?
It's not a bad set of results. One of the problems that I've always had with pharmaceutical companies, particularly in South Africa, it's a regulated industry. Therefore, they've got very little pricing pressure, pricing margin. So where their costs increase, they can't pass those costs on. And I think if you wanted to analyze the accounts, this is what they showed, that they were not able to pass on higher costs to the consumer. Whether they
Bad
can
for
do
business, but good for the consumer.
great for the consumer, but that's a regulated industry. You know, that's where they're confined and restricted. We've seen it with Aspen. We see it with this company. So either they've got to do higher volumes, become a lot more efficient. But it's very difficult if you've got a rand that's weakening and you've got ingredients that you're important that are going up.
We'll hear from the CEO a bit later. But one thing that is for sure, they are trying to push those big movers on the like the energy drink side and that kind of thing. That sort of product obviously takes the strain away from the pharmaceutical side of things.
Those are the fast-moving goods, sure, and those are not controlled by regulation. Those are consumer goods, sure, and that's what they have to start to develop, or even some of the over-the-counter drugs, which are outside of the control of regulators.
David, quickly, vehicle sales, another low in November. That's just sector just waiting for interest rates to turn. Huh?
Another shocker. I mean, that's a huge decrease. It was something like 30%, over 30% down in passenger
it's just
vehicles.
getting worse every month.
But that coincides with some dramatic moves down in other areas. In Asia, we've seen, in Japan, we've seen similar things, Europe as well. So I think the motor industry globally under severe pressure.
We'll chat to Paul Harris of FirstRand after this.